Hello, everybody. How we doing out there? Welcome to ReadySetCrypto's live session, our ReadySet live stream. And today is Wednesday, the 7th of September. Welcome aboard, everybody. Do us a favor, if you can, when you check in, go ahead and hit the thumbs up button and let us know where you're coming in from. All right? So we're going to be starting here in just a minute or two as we get folks checked in. So we got folks coming in from Amsterdam. We have, hey, Rajiv, how you doing? Good to see everybody out there. Make sure you check in. Let us know where you're coming in from today, and we'll get started in just a minute. All right. Mav, what's going on in your world out there?
Oh, no. We're back under 20K. Literally no one could have predicted this. No, I think it's, I think this is what we talked about last week in terms of, hey, it's September. It's sort of a self-fulfilling prophecy. You know, it is the suck as far as Bitcoin's performance historically is concerned. It's the sand trap month, if you will. It is the one that generally is going to be a red candle most years. So
yeah, September and October are real rough in the financial markets.
That's exactly right. Yeah. So it's not so much Bitcoin's historical record as it is kind of the macro environment right now. And if you're looking for I don't know, smoking gun as to today's price action towards the downside, that's a big piece of it. And without really anything, I mean, because we all know when the merge is happening, it's kind of in its final stages, if you will. Call it priced in or not, whatever. It's coming. It's pretty soon here, and then we're going to get through it. And it's going to be like the halving event where it's like, okay, now what? And I think as we talked about last week, there's some cool things on the horizon for Ethereum as to the now what scenario. But for the most part, crypto's pretty quiet, and there isn't going to be another one of these big, type events or releases like that for a little bit. And without some big thing to look forward to, I mean, because what do? We look forward 2 years towards the next halving event. Yeah, I think it's going to be a case very quickly that we're going to get back into where we were at the beginning of this year, where we were very susceptible to, the overall macro conditions, basically what the Fed was saying, basically like, all these sort of like fears of inflation, supply chain crisis, war in Ukraine, blah, blah, blah. The dominoes start to fall again. And when that's the case, there isn't much, call it the crypto markets like gambling parlor, call it the combined faith of everybody participatory in it. It's just when there's kind of that rush for the exits like that, that's when we start to see those resistance lines start to be tested. So, yeah, this is a story that's been told many times before, and it shouldn't be that surprising at this point, but somehow it still is, and somehow we're still finding ourselves surprised by the fact that Bitcoin is a volatile asset. Who would have thunk it?
But we've been looking forward to this event not looking forward to it, but I mean, we've been anticipating this event for a long time. Right? Because if you think about it, essentially we had 0% interest rates for forever, right? So like the Fed started cutting rates back in 2007, trying to, stick the toothpaste back in the tube, and they were never able to get it back. So pretty soon we hit 0%, and we've been super low for the longest period of time. And all of a sudden we've gotten this inflation thing, and the worm has turned on that. So the problem is always in times like this that people want yield. Now, 10 years ago, for you to get yield, you had to buy some kind of risk asset, whether or not it was stocks, equities, whether or not it was, in fact, even crypto at the time. And that became, much more prevalent the last couple of years as we still had 0% coming out of the pandemic. So this is why we get these rallies like this. But now with yields coming up, all of a sudden there's a lot more competition for the investing, dollar or euro or whatever you're using for that. So we knew that this was going to come. We knew that this was going to suck when it happens, right? Because, all of a sudden it's like, where should I put my investments? Should I put them in something where I get a guaranteed yield, or should I put them in something where I can't even define the value of it? So this is part of the problem that we're running into. And as, quite frankly, I think the opportunity and the challenge for crypto to step aside and start to show some intrinsic value behind what they do.
Yeah, very much agreed with that, Doc. I think if you're the type of person who is looking for, okay, yes, when obviously when the Fed goes dovish, when they start to kind of go back into money printing mode, when we start to see signals of that, yeah, then it's probably the case that the crypto markets are going to respond positively. But who knows when that's going to be? Currently, the CME FedWatch tool, us being about 14 days out from the next FOMC meeting, it's pretty inconclusive. It's maybe 50, maybe 75, maybe 25. Who knows? It's kind of one of those things, and we're going to keep operating under that sort of MO until there's a much clearer indication as to the Fed is starting to move away from addressing inflation and now is trying to help with the unemployment numbers or whatever. But the problem with that is that this is not a unemployment-driven recession, if you want to call it a recession. So we're kind of in this liminal state between, moving forward and moving backwards. And while that's the case, I think there is a need for us to look to sort of, look for the kind of tools, the kind of products that are going to help us, say hedge, but at least make the most of this. So you might have heard of this company before. This is 21 Shares. They also do DeFi products under the name Amoon. And what's cool about them is, so this is more for our friends in Europe. This is really not for anyone in the US. Apologies. We just don't have the same sort of regulatory, clarity, if you will. The SEC is doing the SEC stuff, and Congress is doing Congress stuff. Yeah. What's cool though, if you are in Europe or in a country that could take advantage of this, is the fact that these are all ETPs, which you might have heard of an ETF before. An ETF is going to track a specific index. So think like Bitcoin, it's going to track the index of Bitcoin, or it's going to track the index of the S&P 500. And it's basically just going to try to replicate the price of that underlying index to say, okay, the price of BTC right now is 19,417. Okay, try to, keep the arbitrage as minimal as possible. In the case of an ETP, it's a little bit, call it broader. And for example, like when 21 Shares is doing their Bitcoin ETP, this is not an ETF, mind you, this is an ETP. They're similar. All ETFs are ETPs, but not all, I'm not gonna go there. Square pegs, round holes, but basically what's interesting about this is that instead of it trying to be an index that like tracks the price of Bitcoin, as concretely as it can, as like an ETF would, what it does instead is it's using I think like 8 different call them verifiers basically of Bitcoin's price. So it's kind of averaging out between those. So it's less susceptible to, just maybe market volatility, or it's going to be a better approximation of kind of like the spread of the market versus like if you do the index of Bitcoin based off of every single exchange out there, accounting for all the discrepancies, arbitrage of Bitcoin's price, you're obviously going to end up with a very different number versus if you just took 8 very trusted, like think like Coinbase and think like Kraken, and you just went through the biggest, most trusted exchanges, Binance, whatever, you average the price of Bitcoin between them. That's an ETP versus an ETF is going to be, again, okay, not going to belabor the point here. But what's really cool is that, so those are single asset ETPs, all the ones over here on the left-hand side. Now, when we go over to the right-hand side here, they have these indexes. So their first one was called HODL. and it's made up of Binance Coin, Solana, sorry guys, Polkadot, Ethereum, Bitcoin. You can see the weighting of each of these, and it's a nice, say like spread of large cap crypto assets. Gives you a nice, I don't know, say diversity of risk exposure. Obviously, this is not owning the underlying assets. Now, what is important is that they still have those underlying, every share of this ETP is backed up by, it's collateralized by a requisite amount of the same asset. So when they say that they have 49% Bitcoin, that means that some cold storage somewhere that they've got 1 Bitcoin to represent. Anyways, again, not belaboring the point, but just making sure you guys understand. So that's good, because what we've seen over the past couple of months is the dangers of over collateralization or under collateralized loans. When you get really wonky with your mathematics and you let yourself believe that the price is always going to go up and to the right, and it doesn't, and then suddenly you're underwater billions of dollars. Shout out to the 3 Arrows guys. Hope Dubai is doing pretty well. Anyways, so unfortunately, this index that we're looking at has underperformed. Just straight Bitcoin has underperformed Euro stocks and S&P 500. So it's not really a good representation of obviously hedging, obviously a good safe haven for your assets or anything like that. Just because you diversified does not mean you took on less risk. That is a lesson that it needs to be drilled into everybody's head. Diversification doesn't mean automatically good. However, what is cool is that they just introduced some brand new indices, this SP BTC and this SP ETH. And what this is a risk controlled Bitcoin index. So instead of that other one we're seeing before, the ABTC, which is again just the price of Bitcoin, what this is instead doing is it is trying to, as best as possible, balance the allocation of this ETP between Bitcoin, volatile asset, and USD coin, the stable coin. And based off of market conditions, as best they can, they're trying to keep that blend as optimal between risk and risk off, if you will. So you can see that this chart is obviously a lot smaller in terms of time frame than the one we were just looking at. But just during the time that this has existed, about a month and a half or so, it has better tracked the sort of naked price of Bitcoin, the S&P 500. It's not beating them, but it's certainly not as bad as the one we were just looking at, that clearly is underperforming over, basically the better half of 2022. Instead of that, having something that is a little bit more risk managed, we could also look at the SP ETH one. And that one's even doing a lot better. In fact, at some points, it is broken above the performance of the S&P 500. So even while being risk managed, they still managed to outperform, the big indices out there. Now, is this going to help you towards financial independence and retirement early and stuff like that? Not in of itself, but it is a nice way to get away from, hey, market's volatile. I'm not really sure what to do with my money. However, I don't want to put it in just straight stable coins. I also don't want to put it in straight risk on crypto assets. I don't want to put it in something like gold. By the way, let's see if I can find it really quick. They have the bold ETP. This is really cool. So what this is you see, doing pretty okay. Nice. It's toeing the line between the S&P 500 and the Bitcoin. So what this is it's just made up of Bitcoin and gold. So they tried to, play with the weighting based off of, again, risk, reward, risk on, risk off, based off market conditions. And I think that's pretty cool. I think having access to these types of financial products that, again, you're not owning the underlying assets, not your keys, not your crypto. Yeah, I get that. This is more like a stock, okay, stock is a bad example. This is more like, your ETFs or your stuff on like Vanguard or something like that. I don't know. This is you just basically playing to the price of the asset appreciation or depreciation. What is going on in the markets, and when you have something like Bitcoin that over a long enough time horizon is probably going to go up and to the right. So long as you can balance the risk during times like these using financial products like these, yeah, I think you can do pretty well. In fact, they even have a short Bitcoin ETP, which is unfortunately or fortunately their best performing indice of this year, because it is obviously inverse. So hopefully that was a little bit insightful, a little bit eye-opening for those who, especially in the States, we don't hear about crypto financial products like these very often because, again, Congress, SEC, whatever, it's eventually going to get to that point. Maybe not to the same degree as what we just were looking at, but I think pretty soon here we will see, now that we've gotten a futures Bitcoin ETF, we're going to see a spot Bitcoin ETF at some point in the future. We're going to see a spot Ethereum ETF, and then things will start, just the financialization of the space will start happening, and it's going to be, just something that takes off over time. It's really for the mass retail space out there who want to do this through a fiduciary, want to do this through some sort of wealth advisor that is managing their money, and they don't want to take the time to manage their own crypto. Best thing about crypto is that you are your own bank, and some people choose to forego the full freedoms that entails. They just want ultimate convenience, and that's their right. That's what crypto enables them to do. So that is hopefully what is coming down the pipeline a couple of years down the road. But till then, let's talk about what's going on today. Doc, what are you seeing from the charts? Is this, are we doom and gloom, or are we kind of lukewarm and pasty?
Well, I got some interesting developments that we saw today. So, well, first of all, before we get into this, if there's any ticker pairs that you guys want me to take a look at, please go ahead and throw them into the chart. And hopefully by the time that I finish up the first preamble here, we are all set. Okay, I'm going to move over to the charts here. Oh, there we go. Yes. Okay. So what I'm looking at here, first of all, is crude oil. Now, crude oil obviously has a huge impact in terms of the, just the raw expense of what it takes to run an economy. And this has actually been screaming lower lately. So even though we have some relatively high fuel prices, some states higher than others, but we've got a death cross happening now in crude oil. Look at this. The 50 is crossing under the 200, and a big move down today. And so because of this, what happened was, I'm going to kind of try to string this together. Looking at the bond market, the 10-year note, we actually had this coming down today. So this is the future implied interest rate. When you see 33 there, that means 3.3%. 3.3%. So if we start to see this coming down, I would love to make a vote at this point to say, let's get rid of the Fed. Let's just use the bond market to set the interest rate, a free and fair market. We don't need a political body telling us, transitory inflation. The bond market knows better in terms of this is the smartest market that I've ever experienced in terms of having forward knowledge about what's going on. So what I want to encourage you guys to do is to watch the 10-year note, watch the interest rates. If we start to see it come down, we will start to see risk assets like crypto start to perk up. So watch for this, because this will mean that they feel that the Fed is in the future going to start to either slow down the rate increases or maybe even start to ease them. Okay. So anyway, let's get over to some of the crypto assets. Unfortunately, we have BTC under 20, but what I do want to bring up to you is if we go back to this movement that we had, and this is a little over a year ago. Everybody in the planet was looking at this and going, oh, that's a descending triangle. And then once we hit underneath there, look at the volume came in, boom. Okay, so sometimes what happens is when everybody sees the same thing, which is everybody's like, oh no, we're under 20,000 again. A lot of times you can see a massive rally from here. So if we expand this up, if we start to see this trading above 20,500 again, this could create a massive short squeeze, at least worth several thousand points. Now, I've been looking for this thing to get back up to 28 at the very least, even if it does stay in a bear market. I think there's the potential for this to squeeze up to 28, but we'll keep that in mind. Looking at the rest of the assets in the top 20 today, I don't see anything really. Ethereum Classic is strangely strong. I don't know why. Near Protocol, some of these are up 7% today. We have EOS up 19% today. So some of these coins are starting to move. Okay. All right. So I'm going to look over at the list here, and Tuckafu from Blazing Hot, California wants to look at SNX. So guys, let me know. Otherwise, we can keep this session short today. SNX. And I got the wrong one here. So let's look at SNX versus US Tether. There we go. All right, I like this one in the fact that it's still setting up a higher low. This is still good. So if it's able to drive above 350, I would say it would be better to wait until it gets above the 200. But this could be setting up for a very strong move. Right now, if I look at this from an RSI Laguerre perspective with synthetics, this has got a lot of energy sitting there. And this could be a strong move back up to the upside. All right, so watch 3.5. All right, next one, Ashval. We have EWT. EWT. If I can type, I will get EWT listed up here. All right, let's take a look at this one. This one is also starting to make a little bit of noise. This is a fairly classic looking like cup base here, and it's a cup with handle. So a more conservative entry on this thing would be to wait until it hits 550 on big volume. But notice what's happening with the volume. It's starting to really increase. So we'd want to see this thing. I'm not one of these guys that likes to buy on the way down. What is low can get lower. I think as a lot of you have figured that out over the last few years. So I like to buy assets that are rising in price, which seems counterintuitive to a lot of what your advice that you've learned. But you're not that far off the bottom from this. Wait until something starts being accumulated, especially with good volume. Okay, let's see. Mr. T. I did meet Mr. T once. I was going to a baseball game, and it's like, there he is with, 5,000 gold chains around his neck. And I'm like, hey, Mr. T. And he goes, how you doing, brother? So that's my moment of greatness. My brush with greatness there is Mr. T. All right. We have not broken the 300-week moving average. Well, I'm sure there's a moving average that we could find to apply to any chart in reverse. And we could say, hey, we've never broken the 495-week moving average, right? So it doesn't really matter to me. Moving averages are just averages of averages of averages. This is why I look at price action, guys. Let's see. Okay, double bottom around 17.5. So Mr. T's calling for a double bottom around 17.5. What I would like to do is to put on a weekly chart on this. See, the problem that I have with your assumption, I would love to hear that we have no bottom at 17.5 or double bottom at 17.5. The problem is that we have no volume here. There's no volume profile. So there's not a whole lot of support. So even though there's some individual legs, when this thing broke out back in 2020, There is no volume here. When it broke out, it just went, it was a one-way move. And you could see that over here on the left-hand side, the volume profile. There's no volume here. There is tons of volume at 12,500. That is support. Support comes at these nodes like 20,000. It does not come down in this area. So in my mind, if we break through here, we could go very quickly down to this level. Now, it may not stay down there for very long, right? But this is just price action. This is not moving averages, which can be distorted, which can be just an average of an average, right? So we're not here to predict the future, guys. We are not here to predict the future. We are here to figure out what to do based on what price does. So let price lead you. Don't try to predict the future. Okay, how about Ethereum? How about it? Okay, so what I like on Ethereum, this is kind of a messy looking chart, but this is still a higher low. And if it drives above 2,000, that prints a higher high and that prints a reversal. Right now, the Darvis box for this is rather large. It is this area here. So it's up to 2,000. It's down here. So basically, we're long above 2,000. We are short below 1,400. And you can also see that there's not much support between 1,400 and 1,200. So if it breaks down through here, it's going to go very quickly down to 1,200 or so. So that's my thought on Ethereum. It has broken out above this descending pattern. And today looks fairly strong, not super strong, but fairly strong. We may have an aggressive buy point here at about 1723. Okay, Will, let's look at Binance Coin, BNB. Oh, Ethereum Classic is the real Ethereum. All right, I love religion. Okay, so we have, for Binance Coin, we have a nice little trend line here. And if this descending trend line gets broken to the upside, and if we see this break, I'm calling for a break above 310 for a re-entry, but you could look at 292 for a re-entry as well, too. That could be a nice re-entry on this one. Pretty good price action today. Looks fairly strong. Don't forget, Jerome Powell's speaking tomorrow morning at 9:10 a.m. Eastern time. So he could come along and play grumpy grandpa and say, by God, I can't wait to raise rates again and again and again and again. I'll never stop. And if he does it like he did a couple of weeks ago, he spooked the hell out of the market. So yeah, I like this one. I like Binance Coin. It's been relatively strong, but it does need to break this descending pattern. Otherwise, this is going to turn into a longer term downtrend. Okay, let's see. Last couple here is Flux versus, no, not Flex. That's what MAV does. He flexes. There's Flux versus Tether. And this one looks really strong. This is little cup with handle pattern breaking out. Looks pretty strong. Now let's see if it's got enough energy to carry something here. That's not bad on the daily chart. So we have a good primary uptrend with decent energy. Let's look at the weekly chart. Weekly chart is a little bit, what I see in a weekly chart is these are lower highs. So this needs to break through here to distinguish itself as something other than just another lower high in the weekly chart. So we'll see whether or not that happens. I'd like to see a good break above 150 on good volume. The volume is starting to come up though, which is good. This is a good looking coin. See, Flux is an example of something that's trending higher. Look for entries on assets that are trending higher. Don't fall for this stuff like, hey, if something's low, this is awesome. No, because it could get lower and that's less awesome. Even though you can buy more of it, eventually it has to go higher. Let's see. I'm going to go ahead and approve that comment, Mr. T, because I agree with you. Okay, let's see. Ruskino, HDRN. Okay. This is Hedron. That is a nice looking chart. And look at this. This is a larger pattern as well too. That's building up a lot of power. We saw these a couple of years ago. We saw every coin that was getting ready to pop in 2021. The early 2021 rally did something very similar to this. That's a nice looking pattern. Now it's a little bit energy deficient right now, so it may need to consolidate for a little bit longer here. But watch that. Watch the neckline, which is what? 65,800. 65,800. Nice looking coin. Hey Doc, can I do a Mara option setup? What is a Mara option setup? Can somebody tell me what that is? So I guess the answer is no, because I don't know what a Mara option setup is. Okay, Drupka, Litecoin. Let's go back in time and let's look at Litecoin. Oh, okay, so Marathon, you're looking at the ticker. Okay. I don't have, I suppose I could bring up an FTX. I don't want to waste your time trying to log into FTX right now. Is that where they're trading? Okay, while you're answering that, I'll look at Litecoin. Litecoin could get somewhere if it's able to break above 66 here. If it's able to break above first 62 and then 66 on good volume, this may be a good aggressive entry. It's still below the 200-day moving average in green, which is just representing sort of the mean of the trend, the mean of the trend. Okay, we just did Hedron. All right, let's do a couple more here. Gal. Oh boy. Okay. So we got to wipe off some of this price action in the past. I don't see any price discovery on this whatsoever. This is like this is just a dead coin. So I don't know if this has got intrinsic value to it. I don't know if this is a good or bad project. But right now, on Binance, there is literally no price discovery on this whatsoever. Thinkorswim. Oh man, I just closed down Thinkorswim. I wonder if I can bring it up. Oh, so you want to do Marathon? You want to do Marathon Oil, which is Marathon here. Well, I can't just do an option setup because it depends on what you're doing, right? It depends on what you're doing with Marathon Oil as to whether or not you're doing something 2 days out, you're doing something directional, you're doing something non-directional. You could do covered calls, you could do cash secured puts, you could do straddles, strangles, whatever. I mean, it's maybe this is if you do something like this, DG, maybe if you write in and let me know what you're looking for, I can give you an example for next time. But it's sort of like asking me, like, how do you build a watch? You know, where do I start? So, okay, guys, well, let's get back to it here. So thank you very much for all those excellent suggestions. And, you know, hopefully a week from now, we have a little bit more clarity in terms of what the Fed is doing and, you know, whether or not they're going to. Next Fed meeting is 2 weeks from now. Next week, they're going to be in a quiet period, which will be thankfully blissful because they're not allowed to say anything. So, you know, this will be the first time that every time the Fed has spoken in the last 6 months, the market has dived. So this will be nice if we can break that trend. So, Mav, do you have any final thoughts for the crowd out here?
Just hang in there, guys, and Yeah, we'll see if it continues to drop, but I don't think it's hopefully not likely. We'll see something like a 10K, and if that's the case, I'm going to be buying all the way down. So, but yeah, we'll wait and see where things go from here. Obviously, it's tenuous, so just be careful. But at the same time, it's Bitcoin and the crypto markets. And if you're willing to have a good long-term horizon and maybe utilize some of those ETPs or, other types of financial products I was talking about earlier, might help you mitigate some of the risk or mitigate some of the volatility at least. So yeah, just keep your ears open as to we'll continue to feature stuff like this. And as always, thank you so much for hanging out with us. We do these every Wednesdays, as well as we have plenty of free resources on all of our free channels, such as ReadySetTrade, where Doc lives and teaches god tier options in sort of education, as well as ReadySetVision, which is our on-chain analysis service. It's all about how do you outsmart the market? How do you use statistical modeling and blockchain data to basically build models that tell you pretty much what's going on with Bitcoin? For example, there's that rainbow chart that gets thrown around a lot. Right now, it's saying it's a fire sale for Bitcoin. So even if it continues to go down, more often than not, you're probably going to work out pretty well once it kind of reverts to the mean. And that's just kind of how we operate around these parts, is take a lot of the emotion and fear and uncertainty and replace it with solid logic and reasoning and calm temperament. That's what ReadySetCrypto is all about. So if you like our vibes, make sure you're subscribed, and if you like the video, as well as check out some of our communities down in the bio below. But anyways, guys, thanks so much for hanging out with us, and we'll see you next week. Over to you, Doc.
All right. I couldn't have said it better. Thanks, everybody. We will see you next week. Adios, amigos. You guys, everybody take care. See you now.
See you guys.
I think I hit the wrong button.